Good morning, world. Hey, it's great to be with you on Friday. My name is Doug Shreve, and hi from Gimbal Financial. Gimbal is a pet-friendly place. We love pets, but we're pet-friendly except for bears. That's the thing you need to know for today. Bears, bear markets. We're not down with bears. Now, there is one bear that we are always excited to hear about or see, and that's Phil's dog. Phil's dog, Bear, is just it's a little adorable doodle, and all other bears though need not apply. You can see on the for your safety disclaimers that we cover opinions here. We have thoughts, we have ideas. Some of those ideas are original, and a lot of those ideas we've stolen from other people. I am so thankful for the investment community. We have been poured into by people like David Malik, Ron Richardson. We've been poured into by Brian Auer. We've been poured into by Mark Minervini, by our friend Patrick out in California, another friend Patrick in Missouri. There's just so many people who've poured into us over the years, and it's with a grateful heart that we're here and we're building our knowledge, and we wake up excited to learn about the marketplace and learn about how to serve you and your finances and your family. And it's because of the friends we have and the books we've read. That's probably true for your life too, as you've looked back and wondered, how did I get here? It's probably from combinations of friends along the way or people who have just taken the time to invest in you, and we're grateful for that. But these opinions will cover things like the S&P 500 index, the small cap 600, and the Nasdaq. And today we're going to cover a few more indices that I'd just like to reference. The small cap has a cousin called the Russell 2000. And we'll be taking a look at that today. We'll also be taking a look at some different bonds to get a feel for what the bond indices are doing. And the reason why I like to cover the bond indexes is so that you have an idea where the risk-free rates are. And as we've seen and you've seen in your own checking accounts or savings accounts, is we've seen interest being paid, and that adds competition to the market. The risk-free rates could be the 13-week treasury or a 5-year treasury. We like to look at those just to see what types of guaranteed returns are out there. And when we say guaranteed, you all know, maybe this should be on the disclaimer, there's nothing guaranteed when it comes to investing. Nothing, not even a treasury. But it's been a solid place forever and forever. So let's dive into things. I guess before I do, I for the past year or so, I've subscribed to the IBJ. Do any of you guys look at this? It's you can pick it up at, I don't know what, but you can look at it online. I just like the feel of paper, and so I was looking at this and I noticed there was a section in here about the Madam Walker Theater. If you live in Indianapolis, you're probably pretty familiar with where that is and what a beautiful theater it is. And it struck me just what a great place for Indianapolis to have had a theater like that. And this is fall break for many of our schools. It's fall break for Carmel schools. Our kids attend Carmel schools. I think Fishers is coming up, Westfield, and maybe wherever you live. If you're tuning in from Seattle, um, you might have a fall break soon too. But my family drove out to the East Coast for Sunday through Tuesday, and we drove up to Syracuse, New York. And while we were there, we visited Syracuse University, which is a fantastic school. Oh my goodness. Uh, Expensive school. That I want to say it's like 80,000 a year. Can you believe that? My goodness. But while we were there, we got to see something cool. It was their communications building. They have a wonderful communications college that has produced a ton of great sportscasters. They call it Sportscaster U. And while we were there in the communications college, they had a big picture up of Madam Walker. And I'll show you the picture. Okay. Yeah, they had this picture up here of Madam Walker. And something interesting about her is she is known, I don't know if she actually was, but she's known as the first female self-made millionaire. And I can't help but love a heart-filled capitalism story where she was able to create and distribute beauty products. And some of you know that that's close to my heart. My great grandmother started a beauty school in the 30s to help women uh, provide income for their families and also a great place to get a cheap haircut. But I was encouraged to see a little bit of Indianapolis on our road trip to Syracuse, and it's just so good to get out and see America. I don't know when the last time you did that was, when you took off beyond your city, but it was really refreshing to go on a road trip. And we stopped in Buffalo, New York, and got to see the Bills Stadium. That's a classic football stadium, guys. And they're building a new one. So the optimism is pretty high in Buffalo. And we got to see the Niagara Falls. If you've ever been to the Niagara Falls, it's just stunning. I think like 600,000 gallons of waters flow over the falls per second or something ridiculous like that. And the American side is a little bit more of a natural kind of view. If you go over to the Canadian side, it's pretty built up, but that's a great road trip if you're looking for a road trip to take to see the falls. Um, Speaking of falls, let's check out the stock market. Let's see what's going on in the stock market. I mentioned we don't allow bears at Gimbal Financial, but let's take a look at the stock market. And when we do this, we're gonna cover a couple different angles and a couple different views. For those of you who've been watching and tuning in, you know I like to look at the stock market from a charts perspective. It just is such a great way to capture what's happening with all the emotions surrounding making money. There's fear, there's greed, there's optimism, there's pessimism, there's complacency, all types human emotions are baked into these vertical lines. These vertical lines represent price. And down here, these vertical lines represent volume. Think of volume as the amount of people buying in or selling out on that specific day in this case. And so, excuse me, I'd like to take our scope uh, and move it out a little bit. So this, we're looking at a daily chart of the Dow Jones Industrial Average. And I'd like to take our hand and just zoom out our scope a little bit to a weekly. And here we go. So this is a weekly view. And as you can see, if we look back all the way to the left on my screen down at the bottom, that's September of 2017. Okay, if you look all the way to the right, we're looking at September 2023. So we're covering a large time span here. But what I want to focus on is something that's come up in conversations. Is it's basically this: Hey, Doug, when are we going to get back to a new high on my statement? And had this conversation with a friend yesterday, and I really appreciated that conversation. And I thought I might just go back in time with you guys and take a look at the market and highs and see where we've been. So this was the COVID decline right here. You see we hit a high in the Dow Jones, and then the COVID drop, and then it was back up, by September 2020, it started to rally back. The Dow Jones is 30 stocks. Always keep that in mind whenever you hear it on the news. The Dow Jones was up or down. It's 30 stocks. Now, these 30 stocks are global companies. They're huge. And kudos to the Dow Jones because it is a fantastic representation of what's going on in the overall stock market. But as you can see, the Dow Jones hit a high right here, 36,952. Okay. And that high, that would have been, January 7th, 2022. And since that time, it's just been really tough in the stock market. And by and large, as you remember, back in early 2022, even all the way through mid 2022, interest rates were paying, technical term here, diddly squat, and there just wasn't a whole lot of competition for stocks, but there was these fears starting to rise of what will inflation look like after the COVID spend, after the PPP loans and all of that stuff. And so that fear began to cause the market to doubt. And 2022 was really tough. So we haven't come back to those highs on the Dow Jones. And it's just it's interesting to me because that's been a long stretch. And since that time, since that high, the Dow Jones off about 9%. Okay, so let's shift over to the S&P 500. Again, this is a weekly view, and let's stay with our theme here. When will we hit new highs? That's been the question. If you look here, 4818 on the S&P 500, and these are 500 global stocks, and we hit the high, and then we're still below that high. You see my tracking line? Okay. So we're still below it, and the S&P 500 fared better than the Dow Jones, and really fared better than any other major index when we're in major indexes or indices being the Dow Jones, the NASDAQ, the S&P 500, the Russell 2000, which is the mid cap stocks. The Dow Jones during this time held up the best. It's down about 4%. Take a look at the NASDAQ. Okay, here we go. Go back in time. This would have been Black Friday, right? Just after, soon, maybe the day after Thanksgiving, I think. 16,212. We're at 13,559 right now. And so down about 16%, but the most difficult thing, friends, was right here when the market hit a low in October of last year. And at that low, the NASDAQ was down around 38% or so. And so that's quite the decline here. That type of trend really broke when the market crossed underneath its 200-day moving average. And that's a flare, that's a warning sign for us. We like to see markets trading above their 200-day moving average. We like to see it above their 50-day. And if you're looking at the chart, the 200-day moving average is the black line that my cursor is running along to the right of the screen. And then the red line, the top red line, is the 50-day. Both of those are important for us to watch. Let's keep moving on with this theme. Sorry. There we go. Okay, and this is the Russell 2000. This is an important index because this index is a basket of all the up and comers. These are the stocks that are in high growth mode. You and I probably don't know or wouldn't recognize a lot of these names. They're not household names like the Dow Jones. If I listed all the Dow Jones stocks, you'd know all of them. But on the Russell 2000, there's just several that are up and becomers. They're like the top performing JV, and they're looking to move up to varsity. I really like this index because to me, this is just a hopeful representation of new beginnings for America, and it covers a lot of great growth-minded ideas. But it just hasn't participated at all, as you can see. It's down below the 200-day moving average. The 50-day is pointing down, and it's just not been healthy. And so it hasn't hit a high since, again, that same time period, late 2021. And it's the worst performer of them all, guys. It's, it's down about 29% or so. So it's just been flat out tough. And will it always be this way? No. I mean, I don't know when things come back. I don't know how things come back, but my assumption is what it's going to take for investments that are in the Russell 2000 or in the Nasdaq or in the S&P or the Dow. What it's going to take is it's going to take renewed optimism based on earnings. And we are I think today is the day we kick off the third quarter for earnings. Um, Not that we're recommending any of these stocks, but I just want to tell you about them. There's some stocks coming out with earnings. United Healthcare did look pretty good. JP Morgan comes out with earnings, I believe today. I think Netflix is here in a couple of days. But what we need to see is we need to see some good earnings, and then the reaction. We need the reaction to the earnings to follow through and increase buyers. So it's not the news, it's the reaction to the news. I mentioned our good friend David Malik. David Malik had taught us, he had written a book called Dancing with the Analysts that some of you have read. And it was all about earnings forecast. If I tell my family I'm going to be home at 5 o'clock tonight and I don't get home until 8, it's bad news. If I tell my family I'm going to be home at 5 o'clock tonight and I get home at 4:20, it's probably great. It's a surprise. And that type of surprise is the same way with the stock market, same way with your life. That type of surprise is a good thing. So that's what we really need to see in order to get the oomph back on the stock market. I mentioned that we could take a look at treasuries. Let's do that just to see where they are. Not much has changed since last week. Yeah, team, we're looking at 5.3% on a 13-week treasury bill. And so where would you see that reflected? Well, you might see that in your bank CD offerings. They might not pay 5.3, they might be closer to 5. I know competitive money market rates right now are right at 5. Money markets are short term, very short term. You can get your money today. You can call me up, send me my cash. Liquid, very liquid. And so the 13-week treasury bill 5.3. If we go out longer term, we're still in that inverted yield curve. Inverted meaning the short term is paying more than the long term. That's odd, but here we are. And so the 5 years paying 4.6, 10-year about the same. And if you wanted to lock your money up, or you could lock your money up for 30 years, yeah, 4.7. I saw what was that CD I saw this week? I saw a CD, I want to say it was maturing in 2033. It was like 4.8 or 4.9. I can't remember. But I thought, oh my goodness, can you imagine buying a 20-year CD? Maybe some of you can. I can't. I just can't imagine doing that. nevertheless, that's what's going on in the stock market. And don't confuse the stock market for the economy. Two different things. The stock market tends to uh, lead the economy. It wants to be ahead. The stock market is trying to guess where the economy, where the numbers are going to be over the next 18 to 24 months. And so we're seeing inflation in the economy. The September forecast for year ahead inflation measured at 3.2%. And so we're seeing more inflation ahead. We're seeing some on the oil side. You probably paid more for gas this week. The I believe the price per barrel is up right around 4% in just 1 week. And so there's a lot of political pressures right now with what's happening in Israel and fears there about what that could look like. And so taking all of this into consideration, we've been pretty cautious. We've been pretty cautious, number one, because that's what the market's been telling us to do. And there just hasn't been a whole lot of opportunities. Tech has looked the best. And a lot of times that is, the tech tends to lead first. So tech has looked reasonably good the last week, but there are a lot of pressures going on today that weren't there even a week ago. I wondered something as we were taking our trip out east. I wondered where you go to get optimism in your life and positive news. And I suppose it doesn't even have it doesn't have to be sparkly or Pollyannish, but where do you go to stay uplifted? And there's so much out there that can be driven to bring us down. But where do you go? And Caroline doesn't really ever get a chance to listen to podcasts. She's a school teacher, and as you can imagine, a school teacher's day, I don't know how they do it. It's filled. It is filled. So while we were driving, I introduced her to a couple places that I go to receive uplifting, encouraging, uh, inspiring messages. And one of those places I want to share with you guys is the Mike Rowe podcast. Not micro as small, but Michael Rowe. Mike Rowe had a TV show. I've never seen it. It was called Dirty Jobs. I know it's really popular, but I'm super familiar with his podcast. His podcast, I I think, is a spinoff of Paul Harvey. Good day. And Paul Harvey was just that guy was a joy to listen to around the noon hour or whenever he came on. And at your radio station, maybe you remember that. If you're watching this and you don't know who that is, Google him. But Mike Rowe has a podcast. It's called The Way I Heard It. And you could just type in micro.com/podcast. I'm going to show you his screen in just a second. But he's a place where I'll tune into, or his podcast is a place where I'll tune into and just really enjoy it. And I want to share this episode with you. It's episode 346. If you get the chance, write this down. Mike Rowe, The Way I Heard It, episode 346. The title, I'm a car guy, okay? I can't get rid of it. It's just part of who I am. The title, I just love. Rolling up to the red carpet in a purple Crown Vic. Oh my gosh, if that's not a title. You ever been in a Crown Vic? So here it is. Here's what this is about, okay? There was a guy, Bill Courtney, and he was a football coach who went into this school in Memphis, in one of the poorest zip codes in the country, and he helped reshape it. And he helped reshape it by being there, being present, and then speaking to kids as leaders. This guy, he's a lumberman. He owns a lumber company, and he started a podcast that he calls An Army of Normal Folks. And that's the change agent. We started talking about Madam Walker. What did she do for Indianapolis? Her legacy effect is still pretty great. It was seen across the country. Well, what is it that your uniqueness is just really good at? It's better than nobody or anybody else. And what is that thing that you can do that seems normal to you, but it can be of great encouragement to other people? And that's basically what that podcast is about, is taking something that you're uniquely good at and pouring it into the community around you. So I just want to encourage you guys to keep the faith. America is the best place to live. It's the best place to be doing business. And because of that freedom that we have to create and do things in a unique individual way, I think we'll hit new highs again. New highs beget new highs. I don't know when it's going to happen, but keep the faith. And so if there's anything I can do for you, the Gimbal team can do for you, we're a phone call away. Have a great weekend.